All right, let's jump right into it. We're breaking down Nu Skin Enterprises' Q3 earnings call. And look, on the surface, they hit their numbers. But the real story here, it's not about the numbers they posted. It's about this fascinating push and pull going on inside the company. You've got a core market that's really struggling, but at the same time, they're making these two massive, almost bet the company moves on the future.
So let's start with the big one, the headline number. Revenue for Q3, it landed at $364.2 million. Now, that's right smack in the middle of their own guidance range. So, from a top line perspective, no big shocker there.
And what about the bottom line? Well, earnings per share, or EPS, came in at 34 cents. And that's interesting because it actually hit the high end of their guidance. And right there, that's our first real clue. It tells you something important about how they're running the business this quarter. It's all about tight cost control and really disciplined execution.
So you hear that, right? Revenue's in line, EPS is at the high end. You'd think, hey, pretty clean quarter. But, and this is a big but, once you start to peel back the onion, even just one layer, oh boy, the picture gets a whole lot more complicated.
Okay, so yeah, revenue and EPS, they hit the mark. Gross margin actually ticked up nicely compared to last year, which is great to see. But here's the thing. These consolidated big picture numbers, they're almost a distraction. They totally hide what's really going on under the hood, this dramatic split in how different parts of the world are performing. Honestly, how they got to these numbers is way more important than the fact that they did. And this slide just lays it all out, plain as day. It's a tale of two completely different companies. On one hand, you have Latin America, which is just on an absolute tear. I mean, up an incredible 53% year over year. It proves their playbook for emerging markets is a home run. But all of that amazing growth was basically canceled out by what's happening back home in North America. They're getting hit by macro pressures and what the execs are calling a crowded social commerce space. So here it is, the key takeaway. The legacy business is sputtering while this new, agile model is absolutely flying. And that right there brings us to the future, because management sees the writing on the wall. They know North America is a slug, so they're making a hard pivot. They're pouring their energy into two huge growth pillars that they think will literally redefine the entire company. First, a new tech platform called Prysm, and second, a massive expansion into India. So what exactly is this Prysm.io thing? Well, it's their big, bold bet on the whole intelligent wellness trend. Picture this. It's a little handheld device. You scan your skin with it, and it measures your antioxidant levels. Then, and here's the cool part, an AI-powered app crunches the data and gives you super personalized insights about your health. So you see the shift, right? They're moving away from the loud, crowded world of social beauty and jumping into the high-growth, data-driven world of measurable wellness. And just how big is this new playground they're jumping into? Well, the opportunity is absolutely massive. According to Grandview Research, the intelligent wellness wearables market just hit $84 billion in 2024. And Nu Skin isn't just showing up empty-handed. They're basically saying, hey, we've got 40 years of R&D and a treasure trove of millions of scans already. They think that gives them a serious head start to go grab a slice of this exploding pie.
Now, this is the part that should get investors really excited, the business model behind it. It's a classic flywheel, and it's super compelling. Step 1, get these devices out there, tens of thousands of them. Step 2, more devices in the wild means more people scanning. Step 3, those scans convert people into paying subscribers. And here's the kicker, the really crucial part. A subscribed customer is worth 7 times more to the company over their lifetime. That's the engine, the growth flywheel they are betting the farm on.
Okay, so pillar number 2 is India. And let's be clear, this is not your typical flags and balloons market launch. They are being very, very smart about this. They're basically taking the playbook that worked so well in Latin America, that lean asset-light model, and applying it to a market of 1.4 billion people. We're talking localized products that make sense for India, a completely digital-first infrastructure built with their partner Infosys, and, this is key, they're doing a cautious pre-market opening this quarter. They want to test the waters and learn before they go all in. All right, so that's the big, exciting growth story. But, what does this all mean for the actual numbers going forward? And what were the tough questions analysts were asking on the call? Let's dive into the guidance in the Q&A session. And one thing the CFO, James Thomas, really wanted to hammer home was this quote. He pointed out that this is their 5th consecutive quarter of improving their adjusted gross margin. Think about that. With all the chaos on the top line and these huge strategic shifts, they've managed to become more profitable 5 quarters in a row.
That shows a dead serious commitment to financial discipline, and you can bet the market loves to see that. So what about looking ahead? For Q4, they're guiding for revenue between $365 and $400 million. For the full year, they tweaked the revenue range a bit, but here's the important part. They raised the bottom end of their earnings forecast. What does that tell you? It's a signal of confidence. It says, hey, even if sales are a little wobbly, we are so confident in our ability to control costs that we know we can hit our profit targets.
So if you boil down the whole analyst Q&A session, it really comes down to three key things. First, their entire forecast hinges on two big ifs: how quickly people adopt Prysm.io and how that initial India launch goes. Second, they basically admitted the big pivot in North America is because the social beauty market there is just too crowded and the returns suck. And third, the main message was profitability, profitability, profitability. They're going to be super aggressive on costs while they fund these big new bets.
Okay, so let's put it all together. After digging through the numbers, the strategy, the whole shebang, what's our call on Nu Skin? What's the bull case? What's the bear case? And where do we land with our final rating?
The bull case is pretty straightforward, right? You've got this amazing financial discipline with the gross margins. You've got two potentially enormous growth drivers with Prysm and India. And you know they can succeed in new markets because you just have to look at what they did in Latin America. The bear case, though, is just as compelling. There is a ton of execution risk here. These are big, complicated launches. Meanwhile, their core business in North America is still on shaky ground. And yeah, the wellness space is growing, but it's also getting more and more crowded every day. So where do we land? Our verdict is a market perform. Look, the long-term potential here is absolutely huge. If they nail this pivot to wellness and the India expansion, this stock could completely re-rate. But, and it's a big but, that potential is balanced by a whole lot of near-term uncertainty and risk. The core business is in flux, and it's just way too early to declare victory on these new ventures. Now, for a potential trade idea, you could think about a pairs trade. Go long Nu Skin and at the same time short one of their competitors that's still just a pure play social beauty company, one that's really exposed to those North American headwinds and doesn't have a big strategic pivot like this one. Essentially, you're betting that Nu Skin's new strategy will help it outperform its peers who are stuck in the old way of doing things. This is not financial advice.